We're going to talk about Apple. Apple is under a lot of pressure. It has been, had a nice little run at the beginning of the year. The 52-week low is 147.61. The 52-week high is 199.62. It's currently trading at close today at 170.12. So let's take a look at some of the technical analysis of the company and try to figure out what's going on with Apple and how to protect ourselves. These moving averages, the 10-day, the 21-day, the 50-day, and the 200-day, these are key moving averages that a lot of institutions, a lot of traders, many of the banks and the insurance companies, they all use these moving averages as benchmarks for support and resistance levels. We don't need to try to figure this out. We just need to follow the big money. We need to follow the volume. That's where you have to really get your head wrapped around the technical analysis and get away from line charts. If we look at Apple for the first few months of the year, as you can see, in this, on the 52-week low, it traded at 147.61. The 10-day crossed the 21-day moving average. We have strength coming in. This is another good point that you can study charts to see how the characteristics of the stock trade. So this stock here for those several months respected its 10-day and its 21-day moving average. So you could have essentially, once you got into the stock and took your position, you place your stop a little below the 21-day moving average. You might get stopped out, you might not, but you can always get back in. No one ever went broke selling for a profit. Keep that in mind. It touched the 10-day there, bounced off of it. It touched the 21-day, bounces off of it. 21-day, but it closes right at it or above the 21-day moving average. So this is a 1-year daily chart. Each candle represents how the stock traded that day. Weakness came in right through here, and this is the reason why. Even though they beat earnings, so 118 was the estimate, 126 was the actual earnings, and they got punished for it. So there's a lot of pressure going on with Apple over in China. So when the stock broke the 21-day moving average and closed below it, you could have essentially had your stop, got out at that point. If we watch this, watch how this plays out. It broke its moving average. It's not respecting anything. We're in a downward trend now. So when you draw a trend line from this area here, and we're just going to touch this point right here. As you can see, why did it have resistance there? That's established back here. Stock gaps up, pulls back. So back in this range here, previous support levels will turn into resistance when it breaks it. And that's what happened. This was a support level. It broke it here. Now this is going to be your resistance level. And here, as you can see, it turns into resistance. The stock breaks down again. And if we draw a trend line from this bottom to here, it acts as support again several weeks later. So when the stock breaks through, the 10-day crosses the 21-day and the 50-day, we have a lot of the volume starts to pick up. If we look at the earnings, 139, the actual is 146. There's a catalyst, the volume's picking up, the moving averages are crossing, and then you could have rode this nice little wave. It respected its averages all the way up to this area here. We have a doji. This is something to get your head wrapped around, is this area here, a lot of volume, and the stock did not move in price. That's a doji. So what happens with a doji in candlestick charting is the bulls and bears both are buying and selling, buying and selling, buying and selling. The stock is eventually going to come out of that consolidation period, and it's going to break either to the up or the downside. I think we know what happens. It breaks to the downside. And now currently the stock is trading below the 10-day, the 21-day, the 50-day, and the 200-day moving average. There is no reason in the world to buy this stock at this point. The stock is broken down. It's trading below its averages. It's really in la-la land right now. We've got a level of support down here, but you can use technical analysis to give you guidelines of areas of potential buying points, selling points, probabilities, and that will complete our analysis of Apple. Thank you for tuning in. Hopefully this will bring value to your investing and trading process in the stock market. If we bring value to your process, please show us some love and subscribe, like, hit the bell. And be careful. This is a very risky business. It's a very tough industry. So always remember to dot your I's and cross your T's. And don't forget the Z. Happy investing.